Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. US stocks fell for a third consecutive week amid further slowing of global economic growth and concern Greece may leave the euro area. The Standard & Poor's 500 index suffered its longest losing streak since August, tumbling 7.3% so far in May. With more than $1.14 trillion erased from American equity values in May, the S&P 500's performance this month is almost 4 times worse than 2011, according to data compiled by Bloomberg. Although a decline of this magnitude would normally set up Wall Street for a technical rebound, this may not be the case this coming week. Expectations are that the markets will fall further despite already being oversold. The S&P was last seen trading at the level of 1295.22, a decrease of 0.74%. The Dow Jones Industrial Average was last seen trading at the level of 12,369.38, which is a decrease of 0.59%. The euro rallied from a 4-month low against the US dollar on Friday with concerns regarding Greece and Spain, preventing the euro from moving higher. Investors are closely following events at the US-hosted G8 summit at Camp David this weekend, where world leaders are addressing the continuing debt problems in the eurozone and the political standoff in Greece. Fitch cut Greece's country's debt to CCC from B- on expectations it would soon leave the euro. The Greek election will be held on June 17th. The euro is extremely oversold and any good news from the G8 summit could cause the rally to continue. The euro was last seen trading at the level of 127.78, an increase of 0.64%. The Canadian dollar had the biggest weekly loss this year against the US dollar as Europe's debt crisis pushed investors away from riskier assets. The currency lost 2.1% last week after a US factory gauge and leading indicators unexpectedly fell despite good Canadian employment, housing and inflation data. The Canadian dollar was last seen trading at the level of 0.97, a decrease of 0.29%. The Japanese yen was the top performer this week, gaining 1.1% against the US dollar as investors look to safe haven assets. Bank of Japan and Federal Reserve monetary policies have placed the dollar-yen below 80 in a risky position. There will be a Bank Japan meeting on Wednesday, May the 23rd. The Japanese yen was last seen trading at the level of 79, a decrease of 0.33%. While traditionally a safe haven asset, gold has been moving in line with riskier assets such as equities, industrial metals and oil this month, with investors staying away from the precious metal and instead turning to the perceived safety of the dollar. Earlier this week, gold fell to a 4-month low of $1,527 per ounce, near important long-term support levels. Gold rallied after nearing 100-week moving average, reaching $1,597.86. The psychologically important $1,600 per ounce rate was not reached. Gold rose on Thursday and Friday ahead of the weekend and a stronger euro. Gold was last seen trading at the level of $1,591 an ounce, an increase of 1.09%. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. From UFX Markets, I'm Martin Smith. Good luck and happy trading.